Bloomberg Audio Studios. Podcasts, radio, news.
This is Bloomberg Businessweek Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy. Plus, global business, finance, and tech news as it happens. The Bloomberg Businessweek Daily podcast with Carol Massar and Tim Stenovec on Bloomberg Radio.
Also on the Bloomberg is what's going on out of the White House and about an upcoming meeting, Tim, between the United States and Russia. This hasn't happened in a long, long time, and certainly not on U.S. soil.
Yeah, with what to expect, we have Bloomberg News National Security Team Leader Nick Wadhams. He joins us from our Washington, D.C. bureau. Nick, I'm curious about not just the timing of this, but more importantly, the placement of this on U.S. soil. It's something that we've spoken quite a bit about in recent days, but I'm wondering if expectations have shifted with rhetoric that we've heard from President Trump just today, and also what we've heard and what we've reported about the president of Ukraine and what he would and would not give up when it comes to some sort of deal with Vladimir Putin.
Right. I mean, there's a big question about what we're actually going to get out of this meeting. I mean, when these sort of things happen, there's a lot of froth and ferment over the fact that, the two leaders are going to be face to face, staring each other down, adversaries or maybe not adversaries in the case of Putin and Trump. And the expectation is, they're going to come out of this with some big deal. But Trump himself has shown he's very willing to come out of these meetings with nothing. He walked away from a meeting with Kim Jong-un in Vietnam some years ago in his first term. And then obviously there was the Biden-Putin meeting in Geneva, Switzerland in 2021 that resulted in a document and some proposals, but really achieved very little. So I think what you're seeing is the administration sort of crashing up against reality, where in some ways they've portrayed President Trump to be the deal maker and the problem solver who's going to get this thing done. But then, given Russia's advances in Ukraine and President Putin's unwillingness to stop the war so far, you now see them trying to massage expectations a little bit, to make sure that this is not seen as a failure when, as seems likely, there is not going to be a major announcement from it. So you've seen the president describe it as a feel-out meeting. Marco Rubio echoed this words, and then President Trump again said today, we expect this to lead to another meeting between Vladimir Putin and Volodymyr Zelenskiy, and maybe Trump as well, where they may get down to brass tacks on a possible ceasefire agreement or some other deal that could lead to an end to the fighting.
All right, we're talking with Nick Wadhams, Bloomberg News National Security Team Leader. Here's just what President Trump had to say earlier today when it comes to the upcoming meeting with President Putin.
There's a very good chance that we're going to have a second meeting, which will be more productive than the first, because the first is I'm going to find out where we are and what we're doing. Again, this is Biden's war. This isn't my war. He got us into this thing, and it should have never happened. This war would have never happened if I were president. But it is what it is, and I'm here to fix it.
All right, that, of course, was President Trump earlier today. Nick Wadhams, isn't it President Putin's war? And isn't it just something that he is very clear about wanting to expand his territory? And what I have heard from most folks who follow President Putin, who are experts on President Putin, even folks like yourself, like that, he's not going to give up. He still wants a land grab, and he, wants to remain president forever. And I don't know whether by having this war keeps him as president. I don't know. What's the intelligence briefing on this?
Well, the big question that a lot of folks are asking the president is sort of, well, what incentive does Vladimir Putin have to stop his campaign? He's continued to gain territory. I mean, and when you have a grinding war of attrition like this is something that plays to Russia's advantage. They have more troops, they have a bigger army, they have more materiel. They can really tap their own country to continue to fight this war, whereas Ukraine's resources are much more limited. So when you look at the long term, it may be very, very costly for Russia, and it really may squeeze the economy. But in the long run, experts largely agree that a long-term grinding war does favor Russia. So then the question is, what incentive does Vladimir Putin have to stop which then raises the question, well, if President Trump eases off the gas on military supplies to Ukraine, is Vladimir Putin's leverage actually enhanced, and he can really make some demands here? There's no incentive for him to essentially give anything up. Why would he withdraw from territory when he continues to make advances? So that is why there's a lot of questions about why President Trump is holding this meeting in the first place. He theoretically would have plenty of staff, other officials who could go to Russia or speak to intermediaries to understand what Putin wants. That's not really something that the president himself would need to do. And obviously, just the mere fact of having this meeting, it does give President Putin a bit of an advantage because it essentially cuts out Ukraine. So he's going to try to do some sort of a deal with President Trump, or at least get Trump to put more pressure on Vladimir Putin. Those are a lot of the concerns that we're hearing about, this meeting taking place in the first place.
Yeah, it's just interesting to see. I can't wait to see kind of the optics, in terms of whatever they ultimately come out and say. Hey, while we have you, just one last thing. There's a story that Reuters has been reporting out about the U.S. secretly placing location tracking devices in targeted shipments of advanced AI semiconductors that are at risk of illegal diversion to China. This is citing two people familiar with the matter, and they talk about commerce usually involved, Homeland Security, FBI may also take a part. Would this be a surprising thing? I just think all countries are doing things back and forth. But what's your read on that before we go?
Right. I mean, I think you have to see it sort of fits into a broader spectrum of the push and pull between the U.S. and China. I mean, there's so much sensitivity around these chips. Obviously, they do not want to lose track of them, and there's just so many questions about whether these chips are actually going to go ahead. We did have that deal where President Trump essentially extracted 15% from NVIDIA and AMD, but so many unknowns around that. But there are a lot of concerns about these chips entering the wrong hands, and obviously companies and U.S. government want to do everything they can to make sure that doesn't happen.
All right. So appreciate checking in with you. Nick Wadhams, National Security Team Leader there in our Washington, D.C. News Bureau.
You're listening to the Bloomberg Businessweek Daily podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
Well, under President Trump, the U.S. has launched a multi-pronged attack on China's economy. Since Chair Mao Zedong's reign, China has seen it coming. A U.S. system built around the ideal of openness and interdependence is facing off against a Chinese counterpart constructed as a fortress of control. Both sides have powerful resources. Only one has been preparing for the fight for decades, and it's not the U.S.
That's right. And so writes Tom Orlick, Eric Zhu, and Jennifer Welch for Bloomberg Markets Magazine. I feel like if you're listening, sit down and sit tight, because we know the U.S. and China are at odds in a big way on many, many different levels. And this really gets into where China might have the advantage, Tim.
Jennifer Welch is Bloomberg Economics Chief Geoeconomics Analyst. She previously served as the Director for China and Taiwan on the U.S. National Security Council. That was under the Biden and Trump administrations. And as the advisor to Vice Presidents Harris and Pence on Asia and the Pacific. So, yes, she knows what she's talking about. She joins us from our Washington, D.C. bureau. Jennifer, good to have you with us this afternoon. A great story in Bloomberg Markets Magazine from you and our colleagues. How has China been preparing for this trade war?
Well, in a sense, as we wrote in that article, Beijing's been preparing for this for a long time. China has a long tradition of self-sufficiency, dating back to the late Qing Empire, if you want to go that far back. And it's also a tradition of paranoia, dating back in particular to Chairman Mao. But more recently, China has long suspected that the United States was going to be out to contain its rise. And to many in Beijing, President Trump's first term and now his second term are confirming a lot of those fears. So we've seen China, especially since his first trade war with Beijing, really emphasize reducing their reliance on the U.S. market, building up its own leverage over the United States in the form of critical mineral exports, and trying to work around U.S. export controls, in particular when it comes to technology like semiconductors.
I got to get to one number that's in the story that shocked me. And I know you're not an economist, but you look at U.S.-China relations. But it talked about, it says, following Donald Trump's first trade war with China, China made an active effort to reduce its direct exposure to the U.S. market. Chinese exports to the United States now make up around 3% of GDP, down from 7% 20 years ago. U.S. is still China's single largest market, you guys write, and many of its goods go to the U.S. through other countries, suggesting more of its GDP could be at risk. But it really shows that if the U.S. continues to pull back, China's not going to just fall apart. Is that a fair assessment of that?
I think that's a fair assessment, and it's also what has borne out over the course of this trade war. I think President Trump came back into office thinking that he could use tariffs to really bring Beijing to its knees, and that's not how things played out. And in fact, that's when we saw Beijing kind of pull the ace out of its sleeve with the critical mineral controls and bring Washington to the negotiating table and force Washington to make concessions on export controls. Now, to be clear, China definitely does have vulnerabilities here, and not only is the U.S. its single largest market, but many other countries are trying to close their doors to Chinese goods as well, the European Union being a key example. Beijing is also very concerned about Washington's efforts to embed in part of these trade agreements an effort to shut out Chinese transshipment. So Beijing's not exactly resting easy, but it's not in as weakened of a position as I think President Trump and maybe many of his aides thought it would be.
Chinese transshipment, that is when China ships to other countries? Is that, I just want to make sure I understand. Okay.
It ships through other countries, or the goods are largely manufactured in China, but perhaps a final sticker is put on them in, say, Vietnam, and then shipped from Vietnam to the U.S. under the auspices of this being a Vietnamese good. That's been one of the reasons why the Trump administration is so focused in part of these trade deals, especially with Southeast Asia, on trying to curb those practices and is starting to apply a much higher tariff rate to goods that it suspects are coming from outside of those individual countries.
How does it know?
That is a great question. Implementation is going to be extremely difficult here, and there's a lot of details that remain to be decided, like what percentage of a good has to be manufactured in a particular country for it to count as being made in that country, especially when some of these supply chains are so heavily integrated. So the devil's going to be in the details and in the enforcement, but so far it seems a couple of key Southeast Asian partners, including Vietnam and Indonesia, have accepted these terms as part of their trade deals with the U.S.
I want to know, based on your reporting and based on the team's reporting, to what extent it surprised leaders in Washington just how prepared China has been for a prolonged trade war with the U.S. As I mentioned at the top, you spent a lot of time in Washington. You're coming to us from Washington. You were director for China and Taiwan at the U.S. National Security Council. You worked under the Biden and Trump administrations. You advised Vice President Harris and Vice President Pence on Asia and the Pacific. Didn't we know this was coming?
I think many of us in the China watching community suspected this was coming. You know, certainly China's dominance over critical minerals, in particular rare earths, is not a secret. Over a decade ago, Beijing employed this vulnerability against Japan over a territorial dispute that those two had. So we knew that there was a vulnerability out there. However, looking at the Trump administration's actions, it's hard not to interpret some of what happened there, and in particular the timeline events, as suggesting there was some surprise that either Washington didn't think Beijing would go this far in exercising its control over those supply chains, or they didn't realize their inability to shift to alternative sources in a timely manner. Because we saw a very quick turnaround from when Beijing started to put those export controls in place, when U.S. companies started to complain that they weren't getting these key inputs, to when Washington was suddenly talking about maybe we should meet with the Chinese and try and find a way to de-escalate things. Part of that was about the pain the tariffs are causing, but I think a good part of it was also about the pain that these critical mineral export controls were causing as well.
Jenny, how hip is Beijing when it comes to U.S. moves and maneuvers? I think about all of a sudden advanced chips being allowed to go out to China, and now China's saying, no, maybe we don't want to buy your chips. And the whole thinking, the reversal it almost feels like in thinking is, wait, don't give them access to our sophisticated technology. Oh, wait, let's give them access to our sophisticated technology, because that means we'll be in control, we'll set the terms, we'll be advanced. China won't spend time developing their own high-tech community. But China is smart, and they are hip to all of this, aren't they?
Also, they read the news just like all of us. So when you have, for example, top U.S. officials going out there and saying, no, our strategy is going to be that we make China dependent on the U.S. tech stack, Beijing is able to read those words as well. But even before some of that language came out, Beijing's predominant thesis is that the United States would be using these reliances, these dependencies, as sort of strategic leverage with China. So I don't think it required Jensen Huang or David Sachs or others coming out to say that to sort of trip Beijing's concerns, but it certainly didn't help that case. I think Beijing also thinks about this from the perspective of what would China, do if someone was reliant on me for a particular good.
Right.
And so that's the sort of mindset it applies when it thinks about its vulnerabilities with other countries.
So does the U.S. then think China's stupid? That they're not going to, like, as you say, they're reading the same headlines we all are. Like, I don't know.
I think...
Sorry, that's a little blunt.
No, it's a great question, and I can't speak for what the strategy might have been behind saying some of those things publicly, but I think regardless of whatever the intent was or whatever the merits of that particular idea was, Beijing's moves over the last few days to actively discourage companies from buying these foreign-made chips, despite the fact that there's still an advantage and an edge over the domestic competitors, suggests that that strategy is not going to work, that Beijing's not going to allow itself to become dependent on the U.S. tech stack. It's going to continue to work towards having a domestic indigenous solution. And so then the question becomes, if you're still shipping them these powerful chips that they can use to advance their AI models, that they can perhaps base their domestic competitors on, are you still playing to an advantage here, or are you playing a losing game where eventually China's going to overtake you on these technologies?
Can the U.S. become as self-reliant as China has become?
You know, that's a great question that probably economists have a more sophisticated answer to. I would say China's approach takes a lot of costs under it, and it certainly comes with other costs beyond the economic realm in terms of the social, the political costs as well. I think most economists would say that autarky is not a feasible solution for any country, but certainly for an economy as big and as well integrated into the global economy as the United States. I think actually if you look at a lot of President Trump's strategies trying to bring manufacturing back to the United States, just this one aspect of self-sufficiency, it's clear how many hurdles there are to just achieving that one element of it. So I don't think it's feasible, certainly not within the timeline of competition with China.
And it's a risky play for China as well. Just got about 30 seconds, right? I mean, they've got their own economic challenges and pressure. So there is some risk for them as well in playing this game.
Absolutely. They've got property market problems. They've undergoing a demographic transition. Market sentiment has taken a real hit over the last few years post-COVID. This is not necessarily a moment of great economic strength for them. They're feeling a lot of vulnerability and weakness. But sometimes it's that sense of weakness and vulnerability that actually leads Chinese leaders to sort of buckle down, dig in their heels, because they don't want other countries to think that they can be taken advantage of.
Unbelievable. Thank you so much. It's a story we so wanted to do, and we're so glad you could find time for us. Jennifer Welch, she's Bloomberg Economics Chief Geoeconomics Analyst there in D.C.
This is the Bloomberg Businessweek Daily Podcast. Listen live each weekday starting at 2 p.m. Eastern on Apple CarPlay and Android Auto with the Bloomberg Business app. You can also listen live on Amazon Alexa from our flagship New York station. Just say, Alexa, play Bloomberg 1130.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy.
Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive.
It's the question that drives us.
This is the Drive to the Close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, TikTok, everybody. About 18 and a half minutes to go until we wrap up the trade on this Wednesday. Just heard from Bill Maloney and Charlie Pellet on where we are in today's session. Just a little bit higher on the S&P 500, up 14 points at 64.59. Dow Jones Industrial Average, a gain of almost 1%, 440 points to the upside. And the NASDAQ 100 under a little bit of pressure. Tim, it's down about 16 points, so call it little changed on the day.
Hey, I want to bring in Jillian Wolfe, Bloomberg Intelligence Global Equity Strategist. She joins us here in the Bloomberg Interactive Brokers studio. Jillian, you and the team out with a note. It's all about how global tech's hot streak masks growing gaps in stock returns. It's all about the concentration. It's not a new story.
Yeah.
It's something that a lot of people have been concerned about. Is this a tale of two different markets right now?
I wouldn't say it's entirely a tale of two different markets, but I do think there is a little bit of masking going on with how much the largest stocks, just because of their sheer magnitude, are able to mask some issues in some of the smaller stocks in the S&P 500. We're even seeing that today with the S&P 500 at a new high. About 60 stocks are at a new high today. The rest have not hit new highs at all in August. So there's definitely room for expansion. This isn't necessarily a bad thing. That said, there's definitely a distortion happening with what some of these larger stocks are doing.
You know, it's interesting too, right, the concentration. We've been here before, right?
Mm-hmm.
And everybody's like, broaden out, buy other stuff, better valuations. And yet we come back and we see why people buy some of the big cap names, certainly in the tech sector, because that's where a lot of the momentum is. Some of the numbers are off the charts. But is that, I don't know, is fundamentally still, is that a smart story or not?
What we have found in our research is that there are plenty of opportunities in terms of forward earnings growth, in terms of valuation, across the globe and in the U.S. itself, of firms that have better forward earnings forecasts at cheaper valuations. I mean, one of the sectors that's done best over the last 5 days in the U.S. and really across the globe is materials. Still quite cheap, amazing forward earnings forecasts, particularly if you look even in the Canadian market where they're very gold-centric. You can find a lot of stocks that are doing better than the median U.S. stock and even the median Mag 7 stock. I mean, one thing we're noticing that we're going to have a note out on shortly is that even though performance concentration is very concentrated, quality still exists pretty spread out across the globe and across sectors right now. Everyone is just focusing on these largest stocks, and that's really what's driving the gain, so much so.
Valuations.
Yes.
I think a lot of people would argue that by many measures, valuations are high.
Yes.
Right now, but that's not across the board.
It's not across the board. I mean, I think one of the places valuations are getting high that people really aren't talking about enough, honestly, is financials. Price to books on financials are getting quite high. Price to book on some of these tech, forward price to sales on some of these tech names are getting quite high. We do see a little bit of the U.S. premium rearing its ugly head a bit, in that the average U.S. stock, even when it's weighted appropriately, trades at a premium to the average stock outside of the U.S., and that premium has grown pretty greatly over the past year. So the question isn't really, is there a premium? It's how much of a premium is warranted, right? There will always be a premium for U.S. stocks. They do broadly screen as higher quality, but whether or not the premium has gotten out of hand because investors don't feel as though there's another option, particularly with tariffs, is the real question right now.
Well, that's what I'm confused about. I thought everybody was saying that, wait, people were setting their money overseas, that they were kind of not so in when it came to, or so keen on buying the U.S. market. Has that, in terms of flows, what have we in reality really seen?
So we see flows as a bit of a backward-looking indicator rather than an indicator of what will happen going forward. Definitely the first quarter of the year, the U.S. was not the hot market to invest in. The U.S. was actually lagging so much behind international stocks, and it still is year to date, by the way. I don't think a lot of people realize this in local currency terms.
Yeah, we talk about it.
Okay, I knew you guys would be on top of it. But in local currency terms, the U.S. is still lagging. It's not as lagging as much as it was earlier in the year. There's a little bit of this idea right now that nowhere is safe, so you might as well invest in the U.S. But in terms of the fundamental outlook, we have seen further degradation in the U.S. outlook fundamentally than we have seen abroad, because the tariffs are going to hit the U.S. bottom line first before they hit anywhere else. That said, U.S. stocks may bounce back stronger ultimately. We have a lot of the AI names here that may not be as affected by tariffs. And there's also this idea that companies can negotiate with Trump, like what we saw with Apple investing $100 billion in the U.S. last week. So there could be some deals made still.
I mean, you're looking at the IBEX in Spain. I mean, up, I'm just looking, is it, crazy?
When was the last time you talked about the IBEX in Spain?
40% in currency terms.
Look at the Korean market. I mean, even look at the Chinese market. The best market on a trailing 1 year basis is the Chinese market right now. Because they had such an astounding rebound. And what's interesting for us is we get all these questions about the U.S. market. How is the U.S. market getting too hot? And it's not the hottest market right now if you look across the globe.
I mean, the Hang Seng is up 27%.
It is. And
so far this year.
One of the things globally that's helping with concentration right now is this tech rally that's happening in China. It's not all about U.S. tech. And investors are wary of some of the risks that come in investing in Chinese companies. But there's definitely tech in emerging markets, like in Korea, like in China, like in Taiwan, that is doing phenomenally well and actually outperforming the U.S. and has a better forward fundamental outlook than the U.S. tech stocks right now.
Is there a reversion to the mean happening? And what I mean by that is a reversion to global equities being the place to be rather than focused on the U.S. I mean, if we look at the past dozen years and the low interest rate environment, the U.S. market has outperformed everywhere else.
Right.
But that was, if you look at a longer timeline, that's kind of an anomaly.
It is. I mean, the U.S., it always never paid to bet against the U.S., right? If you were underweight the U.S. historically, you were just going to underperform the globe. The U.S. consistently, with the least amount of volatility, does the best, but there are dips, and definitely this is a big regime change for the U.S. Questions about U.S. exceptionalism are still on the line in the current tariff environment, and questions about whether or not U.S. margins can be maintained are on the line.
And look, full disclosure, caveat, I'm asking you this question on a day where the S&P 500 is set to close at a new all-time high.
That's the amazing question, is the S&P is closing at a new all-time high, despite the fact that tariffs are so much higher now than they were at the start of the year.
But there's an uncertainty level that has also been taken out, that they're not maybe a 50% tariff, right, on average.
Exactly. So we're seeing the bounce on that as well.
Real quick thing, Bill Maloney of our Bloomberg Squawk, saying off air when he was in here doing his report, the Invesco S&P 500 equal weight ETF trades to an all-time low relative to the S&P 500 ETF.
That's not surprising to me.
Why? Just quickly.
It's because of the concentration in what's moving the S&P 500. In terms of the names that have hit new highs in the S&P 500, it's not that many names. But they're big hitters. There's names like Microsoft, there are names like NVIDIA. So when you look at this more equal weighted, you're going to see that, yes, there's a lag because the equal weighted index has not hit that high because there aren't enough participants right now.
So
and again,
just investors not interested bidding them up.
We're not.
Even though it may be a smarter play. Or an interesting play.
Correct. Right. But again, it's not a bad thing. It says that there's room for the rally to continue to broaden potentially.
Jillian Wolf, Bloomberg Intelligence Global Equity Strategist.
You're listening to the Bloomberg Businessweek Daily Podcast. Catch us live weekday afternoons from 2 to 5 p.m. Eastern. Listen on Apple CarPlay and Android Auto with the Bloomberg Business app. Or watch us live on YouTube.
The U.S. Antimony reported earnings last night. The stock selling off today, down as much as 10%, despite a second quarter quarterly sales beat, and a jump from last year. So you might be scratching your head a little bit and wondering why we are talking about this company today. It's not a household name, got that. We do, though, talk an awful lot as of late about the race for rare earth minerals and the U.S. amping up its own access and supply. And it is companies like United States Antimony and its CEO that gives us an insight into the pursuit of rare earths, what's going on, and how the U.S. gets where it needs to be. We welcome Gary Evans. He's chairman and CEO of United States Antimony Corporation. It's a small cap miner, $432 million market cap. Shares have more than doubled this year, and he joins us from our Bloomberg News Dallas bureau. Also with us is Bloomberg News economic statecraft reporter Joe Doe. He is our go-to when it comes to all things rare earths. He's here in studio. Gary, welcome. You're not a household name, but I feel like we need to know more about what you are up to. Tell us about your operations, the mines, what you predominantly do right now.
I'm sorry, we're having really audio problems. I can't even hear your question.
Okay, we're gonna fix that. In the meantime, we're gonna bring in our Joe Doe, because Joe, I do think there are these smaller names. We may not know about them. They're publicly held. Obviously, investors are noticing this company this year. Tell us a little bit about this company and kind of its role in terms of mining and potentially rare earths.
I think U.S. Antimony is a good example of this kind of microcosm of all of these critical minerals and rare earths companies that are suddenly getting attention from Donald Trump and the White House. It's the first thing to know. Why would you care about a U.S. Antimony company? Well, you probably wouldn't, but Donald Trump cares about critical minerals. Antimony is a critical mineral. What it's best known for, antimony, is a use in hardening bullets, ammunition. Antimony has always been important to the United States Defense Department, and that's why they are on the radar all the time, as particularly U.S. Antimony.
So, Gary, my understanding is we figured out our tech problems. We are talking with Gary Evans, chairman and CEO of the United States Antimony Corporation. He's there in our Dallas News Bureau. So, Gary, tell us about your world. And I am curious, are you in this pursuit by the U.S. to amp up its rare earth minerals exposure and capacity if the U.S. government is reaching out to you?
So, first of all, it should be a distinction. We're in the category of critical minerals, there's critical minerals and there's rare earths. And so the public really needs to understand there's a significant distinction. Critical minerals, as an antimony producer, we're #1 on the DOD's critical mineral list. And the problem is there is no antimony today being mined in either the United States or Canada. It all has to come from international sources. We were all getting, every country in the world was getting most of their antimony from China. China controls 65% of world antimony ore, the raw ore in the ground, and they control 85% of the downstream processing, which is what we do. So fortunately, we're in a position of having a smelter in Montana and one in Mexico, which makes us the only 2 operating smelters for antimony in North America. And therefore, as you said earlier, we're getting a lot of attention from the U.S. government. They want us to expand our operation. I think I read a report in April. We only have like a 5% supply in our stockpile. So we're trying to ramp up our business to meet this critical need. And as Joe said, there's no question that antimony is needed by the military. It's used predominantly, as he said, in bullets, but it's also used in laser-guided missile, night vision cameras, night vision binoculars, and what have you. So it's a very necessary element for the military.
Hey, Joe, come on back in here. We heard from Gary just now that the antimony mining is not done here in the U.S. or in Canada. Is it possible to do it here in the U.S.? Do we have the material to mine it? It's just not done for environmental reasons. It's not done because we don't have the mineral rights to it, or the companies don't have the mineral rights to it. Like, why has this been moved to China? I understand from a processing perspective why that's happened with rare earths.
Yeah.
But with a critical mineral like antimony, why is that not happening here?
Well, I mean, I think you go to deposits, how good is the deposit, and you can pull it out of the ground, and then who can process it. And this is a question that I have talked about now quite a bit with Gary over the last few months. And, Gary, I think you're better positioned to talk about that to an investor class. I mean, you talked to your investors yesterday on your earnings call, and they asked you about the potential of beginning mining in the United States anytime soon. And you effectively told them probably it's not going to happen anytime soon. So where is kind of the upside here?
We've been working on acquiring leases in both Montana and Alaska. We've acquired close to 30,000 acres of property in Alaska, and we've taken over the mountain area where our smelter is. It used to be an area that we mined some 20 years ago. So it's coming. Right now, we're held up by permitting. We filed permits in Alaska back in May. And so getting back to your question, why isn't this being done? The EPA and the federal government, whether it be the Forest Service, the BLM, Native tribes, everybody tried to stop mining in the United States. And unfortunately, our laws allowed that. And that's why you see mining occurring all over the world except the U.S. It's coming back. There's no doubt this administration is very pro-mining. And we have the resources. There's no question that we can meet the demand for the United States with just our Alaska properties. We have no doubt about that. And that's going to happen soon. I would think in the next 30 days, we'll be able to bring our first loads of antimony by truck from Alaska to our facility in Thompson Falls, Montana.
Gary, how would you describe the conversations now with members of the Trump administration with this government versus your conversations during the Biden administration? How are they different?
Well, we started talking to the Department of Defense back last September. This was right when China banned all antimony sales to any country in the world. And of course, our Department of Defense was getting all their antimony from China. So it raised a lot of red flags. And we've been negotiating various agreements and contracts with the Department of Defense and the DLA since that period of time. As we mentioned on the call yesterday, we're very close, we think, to announcing some things. It's not done yet. But there's definitely a mindset change addressing your question from the Biden administration to the Trump administration. For instance, we'll have to respond to a request from the DOD, and they say, can you have it to us by Friday? We give it to them Friday, 5 o'clock, and by 8:30 Monday morning, we have a red line response. It's not very often you see the government working over the weekend. So there's no question this is a high ticket item with our existing administration, and there's a fire been lit.
Gary, despite the fact that you're getting a lot more attention from the Trump administration and they seem to be speeding things up, I'd still ask, what is the holdup? And I know this was a big question you got on the call yesterday with investors. They kind of seem to be saying, when are you going to get some sort of announcement from the government? What's going on?
We're in a period where contractual changes are being made. There was an open comment period with respect to the DLA that ended actually yesterday afternoon. So I'm very confident we're near the finish line, but it has taken an inordinate amount of time. And there's been a lot of reasons that I can't really talk about today for that delay. But we have to make sure that whatever contract or whatever agreement we sign with the government is beneficial to our shareholders. In the first drafts, we're not. And so we had to make sure that we negotiated as best we could to maximize the value for our shareholders, but also give the federal government a fair trade. We pay taxes, we know, and so that was very necessary.
Forgive me if I missed this, but is the agreement that you might be working out with the government akin to what we saw with MP Materials, which has a $400 million equity investment by the Department of Defense into the company? And we know that MP Materials is certainly working specifically in the rare earths materials area. So could it possibly be that the government, DOD, makes an equity investment in you guys as part of an agreement so that you can do what you need to in terms of ramping up either production or your facilities? So
obviously that's on the table, I think, with us as well as a lot of other companies. I think we're in a little bit unique position in that we have a $450 million market cap. We have our own cash. We have our own capital. We need, more of a big brother than a huge capital investment. Now, as we ramp up this year and do the things that we've told the public we plan on doing and the DOD, I think there's a very good chance in 2026, if we want to do another smelter, if we want to do another project, we also are involved in tungsten and cobalt, two other critical minerals, then those type of opportunities exist. But what we're negotiating today and have been for the last 8 months is something different. It's very positive for our company, but it's not a direct investment by the government.
Gary, I want to kind of bring people into what's at stake here, or at least what is being said is at stake. As you mentioned, the Chinese officials put an export control on antimony, which came well after the germanium and gallium that so many people talked about a couple years ago. Have you guys experienced any of these effects of export controls on antimony from China?
Yes, unfortunately we have. We were acquiring material from a company out of Australia, and we were taking that material, they're 55-ton container loads, to our smelter in Madero, Mexico. And that particular, this third load that we had acquired was transloaded over in China in April. And the Chinese customs confiscated our container, took it off the ship, and held it for 90 days. Gave us no reason. All the paperwork was correct. It had been paid for. And we finally had to get the State Department and the White House involved. For some reason, finally, they released it. It showed back up in Australia, did not come to us. They sent it back to Australia, arrived there about 3 or 4 days ago. It's currently on a ship to Mexico now. So from now on, obviously, whoever we buy antimony from, we are putting in our contracts, it cannot stop in China because China did this for whatever reason. We know this company used to sell antimony to China. Maybe they were mad. The fact that it said U.S. antimony on it maybe ticked them off. I don't know. But they definitely made a statement with what they did.
We're speaking with Gary Evans, Chairman and CEO of United States Antimony Corp. Also with us, U.S. economic statecraft reporter Joe Doe.
Gary, a follow-up on that. I mean, what does this really say? Should people actually be concerned? I mean, eventually your antimony is getting to you here and at your Mexico location. Are we sounding too many alarm bells on this front?
I don't think so. I doubt in our lifetimes we'll ever see antimony coming out of China again. We know their largest mine was depleted last year.
Ever?
And so, ever. I don't think we'll ever see antimony coming out of China. There is truly a worldwide shortage of this product. It is so difficult for us to find product. That's why we went and started mining it ourselves. There's just not any supply.
Presidents love to talk about energy independence. It doesn't matter if they're Democrats or Republicans. Do we get to a point where they can talk about antimony independence and we can get 100% of what the U.S. needs from U.S. supplies?
I have no doubt that we can meet all the needs of our government as well as our industrial customers from Canada, the United States, and Mexico. We don't need to go anywhere else.
When will we be able to do that?
In the next 3 to 5 years. It's not going to happen overnight.
You know, in the last few years, you would have said Canada, United States, and Mexico, and I would have thought, okay, that could work. These countries can all work together. But over the last few months, we've seen trade tensions flare, especially with our neighbors to the north and our neighbors to the south. How does that affect the way you look at the industry and your own business?
No question that, you know, Mexico has a new president. She's very anti-mining. Fortunately, the mines that we have in Mexico are grandfathered, but, you know, there needs to be greater collaboration. Now, the DOD looks at Canada just like it was the United States. So any project we find up there, the DOD likes it and looks at it as a domiciled country.
Yeah, wait, is that as a separate country or because they want to take it over?
Well, you know, the 51st state, of course, is what I'm talking about.
No, I'm just... So you're saying relations between the two nations are comfortable, and they, despite what we have in the headlines, you're saying that they are working and cooperating because they understand they kind of need each other.
Yeah, well, Canada needs antimony just as bad as the United States needs antimony, and Canada is a very pro-mining country. So that's why we have a lot of activities, like I mentioned, in tungsten and cobalt in Canada.
Gary, these conversations you have with defense officials, how dire are they indicating to you that the antimony shortage is for them?
When you see the announcements we'll be making, you'll understand it's pretty dire.
Can you give us?
We have the lowest. Yeah. We have the lowest amount of antimony supplies in the inventory for our government since World War II. You got to remember, we're funding Israel, we're funding Ukraine, and we've dwindled our supplies. And at the same time, China cut us off. So it's a double-edged sword. People are waking up that, hey, we have a problem.
So what does that mean for national defense? Like, what would your message be to viewers and listeners right now about how critical this mineral is?
It's an extremely critical mineral, and there's you know, people that have tried to replicate antimony with other synthetic antimony and hasn't worked very well at all. In fact, it's 3 times expensive. I do think there'll be continued upward pressure on the price because we can't come close to meet our customers' demands. We're changing that. Yeah. We have a substantial expansion going on in Montana that'll be done by the end of the year. But you know, it's just going to take some time. It's not going to happen overnight. It's not like there's a huge pile of antimony sitting over here in some country waiting to go to market. It's all depleted. So we're having to find new areas and to find the ore.
Gary, how long has the dwindling supply issue been going on for? And I'm just curious if you had conversations with the Biden administration as well.
Well, because China was selling so much antimony around the world, nobody cared about it. China kept the price artificially low, less than $5 a pound. Today, the price is $25 to $27 a pound, and probably going higher. I really believe we'll see $50 a pound in the next year. So, you know, the fact that we were so dependent upon China and had blindfolds on that all of a sudden they cut it off had nothing to do with Trump coming in office. This happened last September. So it's been a year since they cut everybody off. It's not just the United States. They cut off every country in the world, the European Union, all other countries that were buying antimony. You can sell antimony to China, but you get nothing back in return other than cash.
Gary, what's the biggest hurdle U.S. antimony faces right now in getting more antimony production up and out the door?
If I had my permits right now in Alaska and in Montana, I'd have antimony in our smelters. I don't have those permits yet. And, you know, we're doing everything we can to speed it along. There's people in Alaska that don't want to see mining, and the group called Save Our Domes. We've done PR work. We're doing everything we can to grease the skids to make sure that people understand that we're trying to clean up. This is antimony left on the ground the last 100 years from gold miners in Alaska. We're picking it up, putting it in super sacks, and bringing it to Montana. We're cleaning up the place, and people are fighting that. So it's an education process. So we've got a lot of PR we're doing, and we're obviously working with senators, House members. We're working with the president. We're working with a lot of people. You'll see some other news about that next week.
Gary, would the Defense Department be your only customer?
We currently have 17 industrial customers. We have one particular customer that would take 100% of our supply. So that gives you an idea. The industrial side is much greater than the Department of Defense. And that's, one thing in these contracts we've been working on. They've made sure that we don't take away the business from the industrial side. And that's why we're ramping up, because the government needs a stockpile, which they currently don't have. And we're the only provider. There's nobody else. It's China, it's U.S. antimony, and a smelter in Belgium. That's it for the whole world.
All right, we're going to have to leave it there. I got to say, this is one of those interviews. I know Joe knows this stuff, but I certainly take a lot away from it. Great, Gary, thank you so much. Gary Evans, Chairman and CEO of U.S. Antimony, joining us from our bureau in Dallas, and of course, our in-house expert on all things when it comes to mining, Bloomberg News economic statecraft reporter Joe Doe. By the way, shares of U.S. Antimony, Tim, they're up about 117% year to date.
This is the Bloomberg Businessweek Daily Podcast. Available on Apple, Spotify, and anywhere else you get your podcasts. Listen live weekday afternoons from 2 to 5 p.m. Eastern on Bloomberg.com, the iHeartRadio app, TuneIn, and the Bloomberg Business app. You can also watch us live every weekday on YouTube and always on the Bloomberg Terminal.